We are live. We are live. Well, I am live. Just gotta get the song. There it is. 3, 2, 1. Okay, another episode of the Things I Wish I Knew About Money podcast. I'm your host, Kamille Smith, and there is a lot to talk about today. A lot to talk about today. First of all, the market. As you can see the title, the market mashed me up. Actually, I shouldn't even start like that. How is everyone doing, right? I've seen a lot of people asking me questions about life insurance or critical illness, and just having discussions from Jamoke last week. So it's an honor that I have people that are, want to talk about it and all that stuff. And I even had a friend post something which was very interesting because I didn't think there was an issue. I shouldn't say issue. I didn't think it was going to be so similar in the States. And I want to show you guys the poll. So you know how I love to do polls and all that good stuff. So my friend did a poll about life insurance, whether people that have kids or don't have kids. And she did a poll, and it's crazy because I believe 95% of people that had kids have life insurance, and about 63 people that don't have kids don't have life insurance. And it didn't shock me, but I want to do a poll just now on that for people in Canada because it's very, very interesting that the reasons why people that don't have kids aren't insured as much as people that do have kids. But at the same time, I do understand. However, let me start this episode straight off the bat. This is going to be as transparent I can be without telling you guys numbers, because I don't want to talk about the numbers because every time I think about it, I feel type of way, right? However, I doing this episode because usually at the end of the month, I like to talk about stocks or the stock market with Kurt, but he wasn't able to make it today. So I decided, I still have to talk about it because actually this month in particular has taken people by a storm, especially folks that are beginners. So as you know, actually no, most of you ladies and gentlemen won't know. So I want to educate by doing definitions on terminologies, because I think that will help you learn more about the stock market. Because I always say, oh, if inflation is 4%. If you're not getting this, then it's crazy and all that stuff. And I don't want to pressure you folks to get it without the proper education. And most likely I've done that before, and I feel like it's come to bite me in the ass. So I wanted to be very, I wanted to make sure like what I'm telling y'all is from the heart. And we are all human and we make mistakes, right? So the first things first is, since I last spoke to you guys, episode 57 with Kurt, it was about Christmas. It was Christmas Day, right? And the market was going a little haywire, but because I heard about Santa Rally, I was like, okay, Santa Rally's coming up. It's good for the last week of 2021. I almost said 2020 of 2021, and then I believe the first 2 days in January. So I'm gonna be looking at my phone because I have to remember things. So on December, so I'm gonna go based on the month. So, oh my geez, look at that. So December, let's say 29th, things were okay. Things were okay. And I'm not gonna say I didn't see it going in a different way that historically it was supposed to go, but something wasn't 100%. It wasn't going the same way as it normally goes, right? So then January 3rd comes, and I'm trying to remember because I was in the market, so it was doing well, and I was like, okay, it's good. And it's not until January 4th. I remember it like yesterday because it's cheesy. So January 4th, I was on the road and I said, okay, I have 2 plays that are happening, but I should be okay. And then I actually looked at the market. As soon as I woke up, I seen it. I was like, okay, it's okay, but it's not great. Yes, it was the 4th. So I decided, okay, because I'm going to be on the road, I need to set a price to get out. Like, it's gone up, but it was acting a little funny. So I got out at a good price with S&P 500 because I do futures. However, I was feeling myself and was like, yo, I'm good with S&P 500. Let me add another one, NASDAQ, because I noticed that it was doing the same thing. But sometimes the NASDAQ was going drastic. And I was like, no, this thing crazy. So I'm like, okay, let me try this one. And I got out the S&P 500 and I said, okay, I noticed that the NASDAQ is going down a little bit. However, I'm on the road. I will deal with it when I get home. 2 hours later, it was down a lot. And I was like, oh, this is not good. However, my game plan, like the previous months, was still going with that game plan that day. And I was like, well, it's gonna blow over. It's fine. It will go back up. It always goes back up, instead of like actually taking in the charts and like the RSI, which is relative strength index. And it just went downhill. So then that day I tried to do defense trading because I swing trade most of the time. I was trying to do defense trading. Most of it worked. The next day, I didn't. The very next day, I didn't read the news. I didn't do my due diligence with looking at what was happening in the day. I did do some defense trading again because the NASDAQ was still going down. So I was like, oh, no biggie. I'm just gonna get a put. I'm gonna do an option, buy a put, which you, so a put, so I'm talking about option trading. So with option trading, there's calls and there's puts. So when you buy a call, you're predicting that the price will go up. If you're buying a put, you're predicting that the price is going to go down. So because I was already in the red with one future, I was like, okay, let me use this let me buy a put option with the QQQ to offset what's happening with the future. It worked. It worked. It worked. So I saw it at a price. I liked it. I got out. And however, I thought, okay, well, it went down. It's about to go back up. Let me do that. Let me buy a call and offset again. That's how I consider my defense trading because it was working in 2021. I didn't know the Fed's minutes were coming out at 2 p.m. that day. So this is January 5th. I never knew that the Fed minutes were coming out. And that is very important when you're swing trading or trading, not when you're investing, because if you're doing long term, it's a different story, right? So then when I realized that my defense trading wasn't working, I tried to dollar cost average my option trades so I would be able to lower it. And then when it goes back up, I cash out, boom, because it's happened before and it's worked. In 2021. So, the minutes release, the market skyrockets like this, quick. And I was like, oh, it worked. And then within a second, plummeted. And I was like, it was ruined. My game plan was ruined, and I felt defeated. I lost a lot of money that day. I'm not gonna talk about the numbers, but I lost a lot of money. So I was pissed. But one thing about being pissed is that I realized that my game plan that I was doing in 2021 wasn't working in 2022. So, and also that week, I should have not been doing any trades because I was also decluttering. I think you guys remember I was mentioning I was decluttering. I'm trying to start the year right. And I just wanted to be more focused. So my mind was not in the market at the time. So that was one mistake that I did, is that I wasn't ready to actually be in the market and actually trade. So mistake number one is not being able to trade because I'm not in the right mindset, right? So I realized that my money was hurting bad. So anyways, let me not digress. So what happens? Any gain that I made in 2021, nope, let me not. My gains were decreasing drastically that week. And I figured, you know what? It's just what it normally does. And it did this in September. It did this late September. This happened. There was a little pullback. And then also in late November, when we found about Omicron, there was another pullback. Cool. I understand this pullback. You know what? No biggie. I'ma just do me and I'm just gonna relax. I'm just gonna relax. So then, boy. So then what happened? The next week comes and I'm like, okay, I'm ready. I've done some research. I understand there's a sector rotation. There's a pullback. I believe the pullback at the time was almost 5%. And mind you, that same time I also, on the 5th, I also had a futures trade, because I always think it's gonna pull back, and if anything, I'm just going to wait it out, and it's gonna go back up. No, it didn't go back up. It didn't go back up. So safe to say, by week 2, it kept going down. Week 3, it kept going down. This week, we are actually heading into a bear market. So by week 3, I felt defeat. I was like, yo, fire, man, I don't want to do this right now. Like, not saying that I didn't want to be in the stock market. I knew that my trading strategy or my trading plan wasn't working. And I was like, oh, what do I do? I don't know what to do. And I realized, okay, Kamille, you need to go. You have to escape this. You have to sit back, be on the sideline. You have to revamp your trading plan or your strategy, because right now it's not working. Your plan that you had in 2020 was good. Your plan that you had in 2021 was all right, and it was getting better. But 2022 is a different beast. And I'm not even saying it's a different beast, because there are people that are making money because they are able to read these signs before it happens. So let me explain that. So with a bear market, I wanna do definitions before I get into anything. So that's why I'm thinking, oh, should I tell you guys what's happening? Like, what are the reasons, or should I explain definitions? So I want to explain definitions, okay? So bear with me. So basically, the further, no, it's the wrong group. Okay. So there is a bear market and there's a bull market. So right now, the bears are dominating the market again. Not even the good terminology. Sorry, folks. Sorry. Let me do this correctly. I want to give you the correct definition of a bear market, because if you don't know the terms, then you're gonna be confused, and I don't want to confuse anyone. Okay. So bear with me. And the reason why I'm acting like this is because it's been hurting my chest this whole day. So, okay, a bear market occurs when securities fall for a sustained period of time. And obviously, the opposite of that is a bull market. A bull market is when securities rise for a sustained period of time. So if you remember, I always talked about the S&P 500, how, it's up 21% from up to the year, it's up da. That is me just explaining that no matter what, the market is going up, so you might as well jump in while you still can. However, even with that, you still want to be mindful about the price that you're getting this at as well, right? Because even though everything is high, and this is the issue that we're having, even though everything is high, there's a possibility that there's going to be a pullback. So even though I was saying you got to jump into the S&P 500 because it's all-time high, it is wise to either wait for a pullback and then jump in. And when I say a pullback is about 5% or 10% that a stock that you're interested pulls back down from the all-time high, and then you jump in. And then you dollar cost average, which is whether it's monthly, quarterly, annually, or annually, you add more money to that stock regardless of the price, and then you just continue to build from there. So if you were to do that, I mean, you would be upset, but you'd be okay. However, in a bear market, that means that the whole entire market, let's say, especially the NASDAQ and the S&P 500. I'll say the NASDAQ because that's the one that's being most affected with technology stocks, is it's gone down 15%. And if you want to know what 15% is, and I'm just laughing but crying, because so the NASDAQ up to now has gone down $1,874.40. Ooh, actually it's only down 11.98%. However, there was a day this week where it dropped about 900 points and then went back up and then came into a positive. Go figures, because that day I was pissed. Actually, I wasn't pissed. That day, that was Monday. Yeah, Monday was a day where I felt like I had a little bit more confidence in going back into the market because I had done my trading plan, or part of it. And once again, the plan that I have worked, but I actually added or tweaked it a little bit so it worked. And I was even gonna do another play where I would have made more money, but I just figured I gotta stick to my trading plan or it's not going to, I'm gonna start getting greedy. And that's another thing that I'm gonna discuss in a bit, right? So the NASDAQ actually went down. Oh, sorry. It was 700 points and it actually went up like $57 at the end of the day. And I remember I even closed my platform and everything. I was like, I'm not trading anymore. And I seen that, I was like, oh, but I could have won more money. And that's something that people are going to have to deal with when they want to be a trader. However, to the investors, right now, to investors, it's a buying opportunity. Say you had gotten AMD, let's say, because I've been watching AMD. Say you got AMD in, things want to act up. Say you got AMD in November. And November was a bad time to get it because of new COVID and stuff. So say you got in November at $151, right? You got it November 8th. November 8th, it was, let's say 150, okay? I seen it go down as low as $99 yesterday. And I was like, yo, it's gone down that much. So any other person would be upset and just want to get rid of it. However, no, if you're an investor and you want to hold on to it for a long period of time, listen, 150 plus 99 average cost is 124. Is it at 124 at this very moment? No, it's at 106. However, AMD is a chip in your on your laptops or desktops, even in, I believe, in cars. Don't quote me on that one. So it's a semiconductor. So that those are promising. So eventually, after this bear market passes by, it's gonna go back up, right? So why not average dollar cost average that? That's what I mentioned previously, just dollar cost average. So if you have money, by all means, load up. I've been seeing memes where people are selling their couch, their TV, and all this stuff just because it's a buying opportunity for investors that are holding on for long term. This is like the best opportunity that a lot of people have had since March 2020. And I remember March 2020, I was like, ooh, I'm going in. So if my money wasn't tied up, I would be doing the same thing, right? But because of the last 3 weeks of being slapped, I literally have to just wait until things go back up to a point, and then dollar cost average. I myself is annoyed because I just wish I had paid attention a little bit more, because had I read about the Fed's minutes, I would have never made that stupid ass play. And I'm admitting that it was a silly ass play, because any other person would have known that wasn't a smart move. But hey, that's when emotions come into play, and that's another aspect that I want to talk about. A lot of people are going through their emotions, especially if you're a beginner investor and you've never experienced this, because you're using your actual money, your hard-earned cash to do this stuff. You're like, what the hell? What's happening to my money? No, I'm just gonna sell. And I would say personally, don't sell. Just wait. Just wait a minute. Okay, guys, just wait. And I have to keep reminding some folks, because they want to panic sell, just like a lot of people are doing. But at the same time, I believe there are people that are swing trading and following the hype, so like buying the rumors and all that stuff and just making profit off of that. So the one suggestion I would say to people that are intermediate and have experience is puts. Do those puts, because if we're going into a bear market, it's gonna be a long ride, and I'm okay for the ride. It's just annoying, because I wish, had I been prepared and actually acknowledged the charts and all that stuff, I'd be in a better position. Obviously, that's what we all say, right? Catch 2020. So, what's another thing? Okay, so why is this happening? So I mentioned bear market. I mentioned bull market. Pullback is when it's like 5-10%. And if you're wondering when you should, if you're doing long term and you really want to milk what's happening, look at the all-time high of a stock and do the calculations and see if it's actually a good quality stock that you're comfortable with, that you believe in, worth getting. Because if you don't believe in the stock, trust me, it doesn't work. I've tried this many times, and it just, especially in last year when it, what was it? GameStop. Actually, it's been a year. GameStop was doing all that stuff. The retail investors, things like that. When you get into that situation, it's so, you're not really going based on fundamental analysis or technical analysis. You're just going with the hype. Have I done that before? Yes, I have followed the hype and it won me, hence the title, right? But I'm back here to say that we have to start educating ourselves and finding ways, better strategies to survive these streets, right? So I just want to mention a couple things that are happening for why all this is happening. So I know that Russia and Ukraine are going through some things, and that was playing a factor, I believe, in the second week. I didn't even know that. And this is why it's important to watch the news. You got to pay attention to the news. Obviously, Omicron was affecting globally. What's that one? There's still debt happening in China with Evergrande. I don't think I mentioned that previously because that also plays a factor. Inflation. I think every time the Feds talk, they talk about inflation and things just start going haywire. I actually noticed every time I would be trading while the Feds were about to speak, that's when things were just going wonky. And that's why I say you have to pay attention to the news, because you want to take in everything that's happening. Obviously, is this time consuming? Absolutely, it's time consuming. But if you're trading, and this is me speaking to the people that are trading, like swing trading, day trading, you have to be up to the time with what's going on in the charts. You have to know when to exit and know when to enter. That is also something that I'm still dealing with. Especially knowing when to exit. Greed is a mother. But sorry, Russia, Ukraine, Omicron, COVID, Evergrande debt, inflation, jobless claims that are happening in the States. Obviously, I know I wanted this to be more of a Canadian type of podcast, but when it comes to what's dealing in the stock market, most people pay attention to the States. So I'm sorry guys. However, fun fact, energy. So the top, the sectors that are doing the worst right now is technology, for sure. Like anyone that has, if you have like Zoom, Netflix, Tesla, Apple, Microsoft, you've noticed that it drastically has gone down. So you're like, is it even worth it? I mean, granted, it is if it's a quality stock. But there are a couple sectors that are actually doing well. There is energy, like oil. Jeez. The one stock that I have, it's been doing wonders. Like actually, there's another one that that was a sneak. It just went up sneaking right past me. It's doing well. I think it went up like, oop, let me see. Sorry, you know, when I remember something, I gotta check it right away. So this is not me recommending anything. Okay, PRQ TO is an energy stock. Well, yesterday it didn't do well, but last week in the overall week it went up 7%. That's not bad. In the last month it's gone up 61%. Shoot. And in the year, like up to date, like from January 1st to now, it's gone up 55%. So I'm not complaining with with those stocks. And anyone that knows that I'm in the Black Canadian Investors group, we are still doing that challenge where we're comparing each other, like comparing our portfolio to the S&P 500. S&P 500 is smacking us right now, but I mean, there are a couple that are doing well, and I believe it's CNQ and CVE. So anyone that wants to take a look at the energy sectors, by all means, you still have a chance when you do your proper research and due diligence to look over those. What I'm just trying to think of everything, folks. Oh, they said the biggest losers industrial, and that's probably the airlines and all that stuff, obviously. Oh, that's not the right year. So sorry. So I'm getting off track. So Russia, inflation, COVID, and just job losses and just the fear. So okay, that's the thing, is there's a lot of fear that's happening right now because no one is really certain of like how things are going to be. So this is the reason why there are a lot of panic selling, and panic selling is literally people just and selling, right? It's there's a saying where the famous saying is you want to buy low, sell high. However, as of late, people have been buying high and selling low. And it's for someone that if you are a person that has just started investing, you will feel discouraged, and there is solutions to this madness. It's not real madness, but a real solution is to start educating yourself a little bit more, doing more readings, following the news on what's happening, and also trying to see what were the reasons that you bought your stocks in the first place, and seeing whether you cut your losses and then put it in a more strong, suitable stock, or weighing, just ride the wave and just close the computer. Don't look on Yahoo Finance. Don't look at Google Finance until like the next 3 months where you're like, oh, okay, it's back to normal and all that stuff, right? That would be another suggestion. Ooh, and I forgot. Also, the good thing about it is earnings are coming up for the traders. Earnings are coming up, so we're hoping that that will help save the market, like start making it come up. And I'm only smiling. Anyone that's watching this, they're running, why is Kamille smiling? Because Apple just had their earnings, and I see in the meme, if anyone watched Squid Game, the first episode, they're showing, I don't remember the Indian guy's name in the movie, but remember when he saved the guy by like holding him? So they were saying that Apple stocks was him, and that was the market. That's why I started laughing. Sorry. I always go side notes. So there is hope with the earnings coming. Hopefully that will be able to strengthen some of the market. If not, there's a possibility that because of the unemployment rate is still happening. So until the economy really like starts to boost up, um, ride the wave, ride the wave. Also, another thing that's happening is crypto. Cryptocurrency is not doing that well either. Like if you're looking at Bitcoin and Ethereum, I'm not gonna lie, I've been watching Ethereum, like it's at a sweet spot. And the only reason why I'm mentioning this is because the new trend that is happening that will soon, well, I guess it's started already, is metaverse and NFTs. And I want to educate myself more before I jump into it, but I do want to at least get my feet wet a little bit more before I actually get into the NFTs. Because if you notice how technology is going, you know that you have to continue to evolve with what's happening in the world. And also everyone knows that technology is the wave, you know? So that is a couple things that are happening. What's another point? I kind of written things down. I have things up as reference. Let's see. S&P 500, NASDAQ, Dow. Those are the three indexes, yeah, that you'd want to look at to see how the market's going to be doing that day or that week. Also, when it comes to like doing your dollar cost average, you want to be mindful of what's going on, and also don't time the market. Don't time the market. A lot of people have been buying the dip and it keeps dropping, which is what is called you're catching a falling knife. And someone's gonna say, what's a falling knife? So pretend this is a knife. This is for the people that are watching. The knife is dropping and you want to catch it while it's dropping. What happens when you catch a knife? You might get cut. You might bleed. And that's what the market's doing. It's bleeding. So I would say it's either you buy the dip and say, fudge, I bought it at the wrong time. I'll just wait for it to ride back up. Or you wait till it goes to the bottom. Who knows when the bottom's going to be? And then you catch it when it's riding back up. And I think if you wait until there's been a week, maybe a week's too long, you know, sometimes, 2 to 3 days of green days where it's not bleeding, that's when you should enter, because then you know that, yes, I didn't get it at the very bottom, but at least I know it's not going to bleed anymore at this moment. I have it at a spot that I'm comfortable with, and I'm happy to ride it back to like its all-time high. And there are a few stocks that are down a lot, like 50%. Some that are in my mind already is Netflix was at 700. It's down to like 380, and I was like, gross. There's Zoom, there's Virgin Galaxy, or I'm just gonna call it Virgin. Palantir, Neo, AMD. AMD is down a lot. I'm not gonna lie. I was a bit worried. I was a bit worried, but I know AMD is my long term. So you being down about 36%, it hurts my chest a little, but I wish I could frigging buy some more because it's actually at a great price to buy more. So now I want to discuss about suggestions or strategies. One of the things that was an issue was my trading plan. Sometimes my trading plan was like, oh, please, 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 just go up, just go up. It was just like, grilling the thing and not using actual technical analysis. But I did at sometimes do that, right? So I just want to be transparent. I had to revamp my trading plan because it wasn't working. Whatever I did in 2020 and 2021 wasn't working in 2022. Had I seen the signs, had I seen the signs that was actually going to be dropping drastically and not just like a little pull back and then go back up, I obviously would have made better decisions and not be thinking about calls and be considering puts. I would not have considered weekly calls, or sorry, weekly options, but be looking at further out options. I think one thing that Kurt always mentioned is he always thinks long term. Also, Andre, he thinks long term. I do think long term, because remember, I have 2 accounts. So my long term account is doing okay. I just want to add more money and fuel to that system. But I also had my risque account where I was really trying to be risky. The issue I have with my trading plan is I don't have an exit strategy fully completed, right? I always was like, yeah, 100% and I'm out. But what happens if it doesn't get to 100%? What happens if it gets to 20% up or 30% up? Are you willing to exit that? There have been many times that it's gone up 20%, and I was like, nah, I want my 100%. And I've just seen it. I just lost it all. I lost it all. So greed, folks, greed is such a big thing, and emotions. There's sometimes we do revenge trading. I would like to call it defense trading, but there was times when my emotions were too involved with it that I was not thinking straight, and I was just jumping into plays just so I can actually recover what I lost. And that is another way of gambling. And that's like an addicting, impulsive action or behavior that you shouldn't be having when you're trading. So I do want to be transparent and I have noticed that is one of the things when I'm swing trading and I have to back up. So I'm backing up from trading, and I have to go back to practicing because whatever I've been doing as of late hasn't been working. So that is one of my advice to folks. If you have no knowledge of trading or cryptocurrency or futures or option trading, you have to practice first before you get in. Because if you don't practice, you're gonna get one and it's gonna hurt. Listen, this whole month I've been hurt. Like I'm embarrassed to talk to people at times, or like I'm and the one joke is Kurt said, oh, but you're still not future plan? oh, you're not swing trading. You're in a whole, you're in a long-term relationship. And I was like, dang, but the relationship done left me. So I have to back up and revamp my trading plan and also finish it, because I tried to get back in before even finishing it. And it was once again that key factor is exit strategy. I need to know that 20% up or 20% gains is just as great as 100% gains, right? And when to get out, when to know when to get out, because sometimes I like to go based on luck, and I'm like, please, please, please go back up. I know you're down 50%, but just go back up, okay? Okay, just go up. And sometimes it's good and sometimes it's not. And I don't know why I rather lose it all than take some of the money out and fight another battle. Like, okay, you lost 25%, get out and then go back, like back up and see what you can do better, right? So that's one thing I would say that I need to work on. So I do have to practice and get back at it, because it's not a smart way of doing things. You'll end up losing money that you've worked for and stuff, and nothing's worse than losing the money that you made. And I know that there are people that look at me and are like, oh, Kamille, like, yo, tell me what to do. I was like, yo, I'm not an investor. Like, don't even bring those talks to me. Like, I don't do it. I've like, nah, like, you gotta do your due diligence. If you're not doing your due diligence, you have to go to an investor broker or advisor that does that stuff, right? And I also, what's the next? Because I don't want to keep you guys too long, but I just wanted to, what is the next step? The next step is do your research, right? Without doing research, you're gonna get burned. So research, due diligence, educate yourself. Where are you gonna find this education? I gave you guys books a couple weeks ago. If you don't like books, start doing audiobooks. There are some books that you can read to help yourself grow. Thank you, Golden Boy. Hey, sorry. Just want to shout out to the people that are, in the chat and all that great stuff. You guys can always come join and talk and all that great stuff. Also, you have to figure out a trading plan. And I'm not even gonna say that. First, become an investor before you become a trader. Because remember, those are two different beasts. Those are two different aspects. You want to think long-term. So stop thinking, in 3 months, I'm gonna get this and then I'm just gonna exit. No. Like, look at the S&P 500. And I know I always talk about the S&P 500. I always talk about SPY. If y'all up in my WhatsApp statuses, you'll see I always talk about it. So, example. So, SPY was up 2.48% yesterday, right? In a day. 5 days, it's up 0.91, less than 1%. Sorry, I'm struggling. I don't know why. 0.91%. In 1 month's time, it's down 7.32%. 6 months, 6 months, it's up 0.71%. This just shows you how much it's pulled back since Year to date, it's down 6.95%. However, this is where it gets more promising. A year's time, it's up 17.03%. And 5 years' time, it's up 93.02%. Stop thinking short term, because you're going to see that, sorry, I was going to swear. You're going to see that things aren't as it seems. It's not all roses and things. When you're thinking long term, that's when you'll see great results. Like, once again, AMD I got at a great price, right? Dang, I should have looked at that before. So AMD is up, and I'm gonna say the 5 years. So AMD is up yesterday is up 2.57%. 5 days, it's down 11.42%. A month, a month, it's down 31.28%. Holy smoke. This is why I'm saying it's buying zone, right? 63%. It's sorry, I got distracted. I got a message. 6 months ago, it's been, since 6 months, it's been up 7.46%. Year to date is down 26%, 26.87%. However, this is where it gets good. 1 year, since a year's time, it's up 20.25%, right? Boom. 5 years, it's up 886.32%. This is why it's better to think as an investor than a trading. As soon as people come to me and say, yo, Kamille, I want fast money, I'm like, yo, then I can't help you, because this is not a quick get rich quick scheme. When it comes to investing, you want to think long term. If you hear anyone that is successful in the trading game or investing game, you'll hear them say long term is the game plan. 5, 10, 20 odd years. That is the only way we'll be able to get generational wealth. So if you're thinking of just for this next 6 months, you're gonna get annoyed. Like, there's been times when I've seen stocks that I've had been down for months, and I'm like, long term, and then it goes up, right? So the first bet is do your due diligence and research. Keep reading. Stop getting those. I was gonna swear again. Well, actually, I can't swear. Stop grabbing whack ass stocks, those meme stocks and stuff. I am guilty of it as well, because I thought I did my proper research and thought that there was stocks that were going to do well based on what sector it was in, and just based on like what people were saying. And I guess that's why you can't listen to what everyone says, right? So just stop it. Oh snap, it's been an hour of me just chatting. But let's see, I do want to wrap it up, but it's going to be a rough. If you think right now is rough, then you have to just step back, go to the sideline, practice, go on a practice website or a stimulator stock market. There's Investopedia, there's Market Watch. I believe there's another one, TMX Money, I believe. And I believe those will do options, because I still want to learn how to do options, but I want to learn how to exit properly and to exit when it's not doing well, right? Yeah, I just wanted to be really honest, because it's been like I said, it's been bunning me this whole month. And oh, actually, another thing, if your emotions are too, I want to say sporadic, but I feel like that's the wrong word. If your mind is not there, then don't do it. Don't do it. There was times when I was just thinking my mom, just not thinking right, and just doing irrational plays that cost me a lot. So these are lessons that I learned and that are bought, taught, and all that good stuff. But I'm, we got this, folks. As long as you're an investor and you're thinking long term, you can keep doing it. And don't trade until you're actually comfortable, because trading is actually like a full-time job, like legit. If you don't have time to do it, then be an investor and just do stocks that you're aware of, and just do stocks that are the best of the best. Right? But I don't want to bore you guys any longer. Actually, no, actually, I'm not boring you guys, because this is just real talks. So please like, subscribe, share, tell a friend, and all that good stuff. And on that note, folks, you already know what song's coming up. Oh. Anyway, of fame music. Flick, flux, money, literacy books. Flick, flux, money, literacy books. Flick, flux. Anyway, chop. Flick, flux, money, literacy books. Fitness in our blood because we're working for your class. Flux, money, literacy books. Yeah, don't chop in on the piano. Flux, money, literacy books. Fitness in our blood because we're working for your class. Flux, money, literacy books. Yo, don't chop in on the piano.